You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. And, well, the war goes on in Ukraine, and the first casualty of war is always truth. So when you're in a constant state of war, you have no truth. But the one thing we do know is that the Russians have not won it yet. At least if they have, the media hasn't told you about it. Well, here to get a historical perspective on what this is doing to markets, what it's doing to global economy, to the global economic system, is our good friend, Bob Hoye. Bob, hey, you've been around a little longer than me. You've studied history more than I have. Is there a historical parallel for what's happening now?
I've tried to think of one, and nothing as stupid as this one. Mm-hmm. You got a problem with Ukraine and the Russians, and particularly Putin, is that they would have liked to have kept Ukraine neutral and not joined with NATO. But then you got the globalists working through NATO who want to keep expanding, and Putin kind of liked having Ukraine, the main bulk of it, as a buffer zone, which I agree with. Mm-hmm. And you can only conjecture what, if Trump was in office, would this have worked out? No, I don't think so. Something would have been avoided. But then you got the other part of the problems. You got Democrats who are down to horrible poll numbers, mm-hmm. and they want a diversion.
Yeah, well, I heard that Putin was nominated for a Nobel Prize, a Nobel Peace Prize, for ending the pandemic.
Oh, that's weird.
Well, you don't hear about it. It seems like it's over.
What you've got here is now another slam to the supply of basic commodities, and you've seen the action in nickel. Straight up, and now when you get this kind of straight up, it can do damage to the London Metal Exchange or members of. And the last one I recall was the tin in 1986, and then the tin cartel was effective, and these were the countries that were in Southeast Asia were the main producers of tin, and they like to have their producers market rigged. And then they wanted to squeeze the short, so they ran it too hard, and the price went out of control, and it was a disaster. And I think a couple of dealers on the London Metal Exchange went tits up and, broke. And but listen, at that time in 86, there was a great belief in OPEC, and until that squeeze phase squeezed out the short squeeze on tin, there was great faith in the tin cartel.
Yeah.
So when the tin cartel failed, we used that to argue that the next one to fail would be OPEC. So we got a good call out of that, because I think then crude went from that fall from $35 down to about $10 or something like that. So, but in the bigger picture here, you've seen what has happened to the ruble. You've seen that the two credit rating agencies, Fitch and Moody's, cut their sovereign debt, like Russian treasury debt, 6 notches down to junk. Now, decades ago in Canada, we had the rating agency. It was called Dominion Ratings, and I knew one of the guys there, and we a few times talked about a rating agency on, say, a corporate bond that was where the company was having troubles, and so they were reluctant to drop the rating down to junk. They were inclined to keep it at barely investment grade, because they didn't want to be the agent of yet another hit to their bond. Sure. But these are sovereign debt bonds, Russia, and they did the full 6-notch drop to junk. So you got investors around the world offside on those things. Margin clerks would have been extremely busy. And as I quipped in a piece I wrote yesterday, our phone calls to staffers at the Russian central bank have yet to return our calls.
Yeah.
So then you've also the crash in their stock market. That's nasty, very nasty. You've got the sanctions on which, in this circumstance, I agree with. You've got to unfortunately, you've got to make the people in Russia suffer in order to react and change the direction of Putin and his oligarchs. Mm-hmm. And it's the only way it can be handled. Now, the idea of prosecuting the invasion of Ukraine further is idiotic. So at this point, they're probably realizing they got to find a way out. And for Putin, because this is just plain bloody stupid. But I took the time the other day to look up the previous uprisings in the former Soviet Union, and in 1956 there was the Hungarian revolution, and they then sent in Soviet troops and Soviet tanks, and it was a very bloody affair. And then in 1968, you had the Prague Spring uprising, which was lovely. I mean, people were really all for freedom, and they had elected a leader. And then, of course, they sent in, I think 200,000 troops and 2,000 tanks. Now, the generals, when they started that to put down the uprising, thought that it would take maybe a week. And I don't have the details on how long the struggle lasted, but they didn't reach a diplomatic solution for about 8 or 9 months. Right. So this one, the stresses into the Russian economy are very serious. So let's put a tick in the box that they are about to fall into a recession. Right. Now, this also fits into a bigger picture where, the work I've done on great financial bubbles. Now, when a great financial bubble is peaking, the pattern has been that lesser countries begin to have liquidity problems. And it was March a year ago when there was a nice little storyline about Argentina, South Africa, and Turkey. Their central banks had suddenly run out of liquidity, which means their local currencies dive and short rates go up. And then the next one it's been unique because you can't call China a lesser country. So I had to come up with a new phrase, which was an outlying country, because it's a huge economy. But essentially, the post-bubble contraction is now underway since last June in China. So this now suggests there's that Russia, a recession due to the financial catastrophe, and this would then join these other countries that are already in a post-bubble contraction. I mean, it's just terrible stuff. Yeah. And so it'll be the pain at home that turns and forces the change with Putin. Now, I had known that he hangs out with these fabulously wealthy oligarchs. And then it wasn't until recently, with this disaster, that I discovered that Putin himself is an oligarch with a huge yacht, and he was able to get it in a safe place and all that sort of stuff. So this is a very personal thing with Putin and his oligarchs. Now, one of the things that I found is that in 2005, when Putin addressed a meeting of the Russian parliament, in one of these annual State of the Union type things, he stated that the greatest catastrophe of the 20th century was the breakup of the Soviet Union. He didn't mention First World War. He didn't mention World War II. He didn't mention that the communists through the period had murdered 100 million of their own people. No, for him, the breakup of the Soviet Union was the big deal, and thus his urge to expand. Now, then the other one was that we all know that he needs oil revenues to fund You can't do a shooting war without real money, either gold or the senior currency. So in Chechen, he had his little war there, and that was 2014 when the price of crude was up to about 105.
Right.
And then the next one, what the hell was it? Chechnya?
Yeah.
And then, Crimea.
And Georgia.
Crimea was on the previous, let's get it back up here. Chechnya was with the 208 high for crude. Then the next one was Crimea, which was with the 2014 when crude was at 107 and just before it failed. And then now in the last year, the moment Biden turned off, they expressed his dislike of the oil business, and gas prices have been going up. So it's been a great play. But then what you've had now with this invasion and supplies really screwed up and unbelievable moves going on in the London Metal Exchange, this is financial, a very serious financial hit. Now, just sort of intuitively, Kerry, when it gets this extreme, you don't know whether it can last a week longer or 2 weeks longer. We're getting on crude oil, for example, the signals we got in June of 2008 when it soared up to 147.
Right.
Other things like nickel, if we put our technicals to it, it'd be just tilt off the wall kind of thing. So, now, there's an old trick I used in January with the January hit to the markets. I just pointed out that often copper has a seasonal rally out to around March. So I use that and a couple other seasonals to say that out of that hit in January, there could be favorable action through into March. Now, as it turned out, it didn't include the stock market because we soon discovered that the stock market couldn't take bad news, which is a sign in itself. But for the hot commodities and wheat to record highs, this is. But all I can say is that soon. Then also soon would be a way to get Putin backed off, and with folks at home, why wouldn't the Russians have their truckers put on a display? It's possible.
Anything is possible there.
It's possible.
Yeah.
And so that's about as precise as we can get on this, Kerry, that it is essentially without precedent and becoming absolutely extreme. And the action in copper is seasonal plus into March. Yeah. And others, well, you can't find seasonals on aluminum or nickel and stuff like that, but who knows? We've been commenting on base metals and precious metals since our business started. And I got started in 1976 with Placer Dome, the very successful formerly gold and base metal miner. And then also in Vancouver head office was Caminco, which was the huge lead zinc base metal and fertilizer producer. So I got my start as a consulting business by being retained by two big mining firms. So I kind of got an idea of how they work. And so we've been doing base metals. That's the one of the groups we cover all the time. We cover crude, base metals, precious metals, and the stock sectors that go with that. Now, with base metals, the big mining companies, the action in base metals mining companies is fairly sophisticated. It often leads the change in metal prices themselves by 3 or 4 weeks. So we'll be watching for that. And the XLE, which is the proxy for the oil stocks, it's not sophisticated. It'll turn with crude oil And we're just watching here and just watching for this thing to soon reverse. And now the other thing on the bigger picture again is that we know that even before this latest violence in the financial markets, that the financial speculation had become unusually reckless. And then the other one is that speculation in the political markets has become unusually reckless. You know, in the case in Canada with Prime Minister Trudeau bringing in what was used to be called the War Measures Act after the truckers' protest had virtually finished, he did that just straight out of spite and hatred for those who would have a different opinion. As he said, these people, their opinions are unacceptable, so some of them are being put in the slammer without bail, and he was going to confiscate the money that was raised through the internet to fund their protest, and it's really bad stuff. And then you have Joe Biden. He is peddling the basic Obama Democrat story. So you can't criticize the policies that are coming out of the White House as from a demented old man. No, it is Democrat policies that are demented.
Yeah, well...
Well, get this. Look at the East Coast, from Quebec to Maine, gets crude oil from the Atlantic and some from Russia.
Correct.
They've been taught to fear pipelines. So a short pipeline in Canada would provide Quebec with huge reserves in the western part of the continent, and a short pipeline to Maine would do it. But I think this is going to crack. And you had the idiocy of Biden, wherever he could, shut down the exploration, discovery, and production of oil and gas, plus with the big pipeline, the transportation of it, because they hate petroleum products. And you can't run a government on hate. So then you have the absurdity of Biden asking the Saudis to increase production so that there'd be a lid on prices. And then now the one I saw yesterday was that he's talking to the Venezuelans. But they're so socialist that they can't produce.
Yeah, no, their oil industry's in a protracted state of decline because they put a bunch of political hacks in there and got rid of the pros. Yeah. Oh, and then there's no U.S. investment, and it's a mess.
Don't just survive, thrive. The Financial Survival Network.
Torque Resources is an exploration company establishing a portfolio of premier copper-gold early-stage projects in Chile. Torque's management and technical teams have a strong track record of raising capital, discovery, and monetization of exploration successes. The company's Margarita copper-gold project is located within the prolific coastal Cordillera Belt in Chile, which hosts some of the world's largest and most profitable copper mines. The Margarita project possesses excellent discovery potential for a major copper discovery due to the strength of the alteration system, large-scale magnetic targets, and the presence of copper oxide mineralization. Drilling is anticipated to begin in Q3 of this year. Torque trades in Canada under TORQ and on the OTC under TRBMF. To learn more, go to torqueresources.com. That's torqueresources.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Yeah, well, they can't run it. And in the United States and Canada, the federal government in Canada is equally against oil and gas production as is in the States. But I think, again, this is such big-time political stuff that the mania in reckless politics is probably peaking with the mania in financial markets. Now, this has happened before. And the run-up in commodities with the First World War, you had a global commodity boom right up until 1920. And on the CPI inflation in the U.S., it got up to 24%. I think you're talking about 7 or 8% now, and people are getting hysterical. Got up to 24%, and then it crashed down to minus 16%. But in the United States, on the mania, the federal government was nationalizing railroads. crash in the commodities market. The political tone changed, and then the federal government went to selling railroads, privatizing them.
Yes.
Now, in Russia, they were full-on communism, and then with the crash in commodities, which would have been felt in Russia in 1921, Lenin came up with his new economic plan, NEP, which allowed pricing, and it was and a little capitalism would be okay.
Yeah.
1921.
Crazy.
So now I'm using that as an example because once this boom is over, none of the politically speculative stuff is going to be affordable. So, it is so exciting. And it is so stupid. In the equivalent period in the early 1600s in England, it had been 100 years of more than 100 years of chronic currency depreciation, intrusive government, authoritarian as England could get, and the veteran merchants in London. They looked at what the government was doing and they called it tyrannical duncery. Okay? Now this is what's going on. Tyrannical duncery.
Yeah, well, you can always count on governments to never learn the lessons of history, right?
They have to be hit over the head with a 2x4.
Well, they're getting it now. So
I think so.
So global recessions ahead here?
Oh, yeah. This is what's in a great financial bubble. The moment the speculative high is in and it heads down, the economy heads south at virtually the same time. I'll give you an example. In 1929, of course, we all know that the stock market peaked in early September. Then afterwards, with the recession, the NBER determined that the recession started that August. Now, you're talking monthly numbers. You can't get it any more precise than that. Then 1873 was, it wasn't as big and dramatic as 1929, but it ranks as a great financial bubble. And in New York, it peaked in that September. And then the NBER then reconstructed the business cycle, and that recession started in October. But in ordinary business cycle stuff, Kerry, you know that typically the stock market will peak 10 to 12 months before the economy, because that's just the way it works. As a matter of fact, economists put the S&P into the leading indicators. But when you're in a great bubble, when the market breaks, the economy goes with it. So here you are. The financial catastrophe in Russia has earned a recession. And keep in mind that when the Federal Reserve was formed in the early 1900s, most policymakers knew that if you had a financial crisis, it would be followed by a recession. So that's where they came up with the theory that the Federal Reserve, as lender of last resort, you would prevent financial crises, and that would prevent recessions. It's still a very attractive theory, but there's been 18 cyclical recessions since the Fed opened for business in 1914. So it doesn't work. So here we are. There's a financial crisis in Russia. Will it be followed by a recession? Yeah. Then the other one, I maintain, is a concluding of the great financial mania. And as it turns down, it'll be accompanied immediately by a slowing economy.
Right.
So, yeah.
Gotcha.
Yeah.
Gotcha. That's pretty remarkable.
It is amazing how it all works out.
Yeah, it's all connected.
I'll tell you a little bit, if we want a little more time on this, is in the 1870s, of course, London was the financial center and England headed up the world's, was the senior economy. So that's when Bagehot was head of the editor at The Economist. And in 1873, he published a book on how central banking and money markets worked. And he pointed out that the recessions were impossible because the Bank of England was there to provide liquidity when it was needed.
Yes.
And ironically, the recession was lengthy with very weak recovery, so that senior economists in England in the early 1880s said that this is a Great Depression. They used the term.
That was
Great
the last
Depression.
one till the 30s. Hey,
yeah,
so
and it ran until 1895. So then you were on a long recovery. And there were many papers and articles written by economists pointing out how that a Great Depression would have been made less worse or could have been prevented. And I've got an article published in 1939 arguing that the Great Depression could have been prevented.
Yeah, well, that's
meaning 1873 to 1895. The then Depression hadn't got through to him yet.
Yeah. Hey, Bob, we got to wrap up, but
okay.
Look, if you got
always fun to chat.
Yeah, you too. If you got a question for Bob, shoot me an email, klkerrylutz.com. Don't forget, go over to the website, financialsurvivalnetwork.com, and sign up for your free newsletter. You're not going to want to miss one episode of it. Bob, thanks so much for coming on, and we will talk to you again real soon.
Looking forward to it, Kerry, and watch for the violence.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.